Hey, rich friends, it's your girl Cha Cha reporting live from the Money Mantra, and we are back with another Forex education video. I created my channel to help people just like you become independent and profitable traders. So if you're here, I'm so happy to have you and welcome back to my channel. If you are new, I do want you to explore and see if you can find other tools to help you. I have a lot of different playlists and over 300 videos geared towards beginners and leveling up your trading knowledge. If you guys are interested in registering for my online course where you can work with me directly and watch the videos in a cohesive way with quizzes and things to help build your knowledge, you can find that information down below in my description box. Now, in today's quick video, we are going to be talking about understanding the different time frames when it comes to trading and how this can influence your take profits and stop loss decisions. Now, if you are new to trading, something that you have to understand is that a lot of what takes place in your analysis is going to happen on the charts. Now, there are three different types of analysis that you can do. One is fundamental. This is where you're checking the news and understanding what's going on in the world and how is that actually going to influence how people are thinking about buying and selling certain assets. When you're doing technical analysis, which is a lot of what I focus on this channel, you are going to want to understand price action. You're going to want to understand what these candlesticks are telling you, what the indicators are telling you, and just the overall market structure. Why is the market buying? Why is the market selling? Where is the market buying? Where is the market selling? And then you have your sentiment analysis, which is how are you actually feeling about this trade? Now, you don't want to strictly trade off the news. You don't want to strictly trade off of your emotions, but you can rely heavily on technical analysis. Although I would encourage you to do a mix of all three when you are trying to make an informed decision about your trades. So today we're going to be talking about the different time frames that you can analyze the market on. So what you see on my chart right now is GBP USD, and this is the weekly time frame. So GBP is the Great British Pound, and this is the Great British Pound trading against the United States dollar, and we are analyzing this on a weekly time frame. That doesn't mean we have to look at this once a week. That means that every candle you see on your chart has taken 1 week to complete. So the opening price for this particular candle will be on a Sunday and the closing price will be on a Friday since the foreign exchange market is closed on the weekends. Now, this is important because even though we see that this is a red candle, there have probably been opportunities to also buy throughout that week. And if we were to enter our trade on a weekly time frame, then it would take potentially weeks for our take profits or targets to be hit. So let's say, for example, we were in the market at this time, we did this analysis, and this is the weekly time frame. Now, let's say our resistance area is here, or the place in the market where we can see price wasn't going any higher, and our entry for a sell was at the top of this candle. Red candles open at the top because price is starting high, and they close at the bottom because price is being pushed down. Now, when you're trading, there's something called a stop loss, which is where you get out the market before you lose too much money. And then there's something called a take profit. When you are selling, your take profit should be below your entry because remember, the price is going down. And how do you find this take profit? You just want to use previous lows or places where you can see the market has opened before on a buying candle. So I'm going to set one TP at the bottom of this candle, and I'm just going to set another TP at the bottom of that candle just for this example. And then I'm going to hit play, and we can see that the market actually was able to hit both of my TPs, meaning that if this was a live trade and I enter it for a sell, I would have made money because the areas that I've targeted have actually been hit and the price was pushed down that low. Now that's a pro. The trade went in my favor and money was made. But the con for some people may be that it took 3 bars or 21 days, because remember, each bar is a week, to make 482 pips in this trade. Now, if you were going to be only risking $1 in this trade, you could have made $482. Or even if you were risking 50 cents in this trade, you could have made $241, which is nice. It doesn't seem like a lot, but for clicking a button and just waiting for some rectangles and lines on your screen, it's pretty decent. But trading is not always about how much money you've made, but how you've actually made the money. Now, there's nothing wrong with this. If you want to be a position trader, which means you're willing to be patient. If you're coming from stock trading or something that requires you to have patience, analyzing on a weekly time frame may be really good for you because you don't mind waiting for the move to play out. Now, when it comes to your take profit or your stop loss, remember you are going to want to price these things appropriately because the market is dropping pretty quickly. You're not going to want to have a 20 pip stop loss on a weekly analysis because that can get hit pretty quickly. The same way your stop loss could get hit quickly if it is so tight and you're analyzing so much data at once. So if that made sense so far, just go ahead and drop a 7 down below in the chat because understanding these time frames and key levels will save you from a lot of stress. Now, the cool thing about this is you can analyze your market on smaller time frames and you can actually hit your profit levels quicker. Now, this is not a guarantee, it is just something that can happen. So what I'm going to do this time is I'm going to focus on the same candle that we started with, but this time we're going to zoom in and we're going to look at what happened on a 4-hour time frame. Now, as we can see, we started on a weekly. So the week will actually encompass all of these candles. So we can see that although the market was selling throughout the week, like we know because we saw it on the weekly time frame, you do see these blue candles in between because again, the market is never just going to be doing one thing 100% of the time. We can even zoom out to the hourly time frame and we can see that this is still everything that happened within the week. This was the low of the week and this was the high of the week. But this time we are on an hour time frame. And we can do the same type of analysis on this time frame as well. So let's just say we still have the weekly high, and we're going to come back to this point in the chart. Now, last time we started on a week, and we can see just how low our take profit would have been, right? That's about 400 pips. But that doesn't happen all the time. Sometimes you can start on the hourly time frame. And this just means that one of these candles are forming every hour versus every week. But the cool thing about trading is that you can still find key levels on every time frame. So in this case, let's put a take profit level here for a sell. Let's put an additional take profit here for a sell. And let's put a take profit here for a sell. Because remember, we're just targeting previous key levels if the market is going to reject off of this high on the hour, which is nice because it's respecting that weekly high. But now we have smaller areas to target and we don't have to wait 3 weeks to make a profit. So let's go ahead and hit play. And we can see within 1 hour, we had our first take profit hit. Within a couple of more hours, we had TP2 hit. And then the market actually continued to fall. So versus focusing on one long move by entering on the week, we were able to break down this move and secure pips on a smaller time frame. Now let's just get our ruler tool and see how long that would have taken. So in one day and 5 hours, we could have secured 162.5 pips which is pretty nice. This is about 300 pips from my ultimate target. However, if you could make $162 or zero, what would you choose? Right? You're going to choose 162. So how the time frame you choose is going to be very important to the levels that you're looking for when it comes to securing your profits. If you are somebody who wants to trade on an even smaller time frame, you can look into trading on the 5 minute, but it's all going to be up to you. Because when we zoom out, we can see even on the 5 minute time frame, the weekly high was still respected. We can see that we found new areas of resistance. We found new areas of take profit, and the market continued to fall. So no matter which time frame you want to analyze, it does come down to understanding the key levels that go into that time frame and understanding how much time this can take to play out. If you are analyzing on a 5 minute time frame, your trade will hit your take profit a lot quicker than if you were analyzing on the weekly. So let's just look here really quickly. We can see the market was at an area of resistance before it sold. We're going to hit play, and this is the 5 minute time frame. We're going to see the market come down, and we're going to see how many pips would have been secured from one level to the next just by waiting and understanding the time frame that you're on. All right, so about 70 pips in 3 hours. So you can see how your time frame gets shorter, your opportunity to secure pips and profit will also get shorter as well. Now, if you have made it this far in the video and you have not subscribed to the channel, make sure that you hit the subscription because I have a lot of viewers on my channel, but 70% of viewers are not subscribed. So if you find yourself keep coming back here and this video is helpful, you like the content, you like my cadence, and you're actually learning, just support the channel. Not only does it push it out into the algorithm to help other traders, but it helps the channel continue to grow so that you continue to receive more content just like this. So if this video made sense and it was helpful, just go ahead and drop some sevens in the chat. If you want to connect with me outside of YouTube, my information is down below in my description box. And remember, you do have the option to register for my online course where you'll get more videos like this supported by quizzes, live sessions, and trade ideas every single week. So go ahead and register if that sounds attractive to you. But that's really all I have for you guys today. Until next time, rich friends.